This is the pound CAD on the 15, and we have a flag pattern that's set up. Quite a few flags today. This is indeed a very nice one. I do love it when we see this very big momentum candle. Typically we see a very shallow pullback, just 4 touches, and then we see the explosion to the 127 fib. I am actually going to do the higher time frame analysis here because while the daily doesn't have much to do with it, some of the lower time frame does. There really isn't anything here on the dailies to talk about. Let's go to the 240. This is what interests me. This 4 hourly big momentum candle here, and if I put a structure level at the top of it, we have violated the most recent structure level. And also, just double checking that this also violates this level. So that means we do have room to go higher up to this level. And whenever we see big momentum candles like this that just violate structure, typically we look at price coming just into the wicks. And I have a trade which I can use when I want to implement it, and it's called a violation trade, and you simply just drop one time frame lower. You look for the structure level to be held and wait for a higher close. Now, we're not going to get that here, but even here on the 60, look at what we've done. We've held the structure level. And for me, there's 3 levels of structure to a candle. There's the top wick, there's the candle body, and there's the lower wick. And if we've just violated structure to the top side, the strongest area to look for a buying opportunity is usually within the wicks. That is never more so when we're looking at a breakout pattern. In other words, a flag. Let's go to the 15. And even here on the 15, actually, look what we've actually done here. We've held this. So let's drop to the 5, which is where we can really see the pattern very easily here. So nice directional move, even double tops there. We draw the channel out by having it on the closes of the candles. Okay, 80% of the time it will be correct on the closes of the candles. A quick cheat is if you then copy and paste that trend line and bring it down, and again have it on the closes of the candles, you should see it be exactly the same. And what that will mean is the distance between your first test and second test and third test and fourth test will be the same, so you know that it's adhering to that trend line, so it's valid. So we have 1 test, 2 tests, 3 tests, 4 tests. Now I'm late getting involved with this, and there's one other piece of information that I need, and that is for it to hit a 38.2, because the majority of the time we do get that fib hit. If I just zoom in a little, we do not have it hit here. We actually fell short by around 2 pips. So why have I entered this trade? Why have I not waited for it to come back down for another test and hit that 38.2? Because it could very well do that. These rules, no matter what rules you have in trading, they are all subjective, and just because it's a rule doesn't mean it's going to happen every single time. It means that the majority of the time it happens. And when you trade as long as I do, you get to you're allowed a little bit of discrepancy. You're allowed to use a little bit of judgment when it comes to trading. And my judgment is this, is that if we go back to that 240, we have already come into the wicks after a major rally. That's a clear sign to me that we're probably not going to come any lower. On the 15, on the 60 and the 15, we've held that structure level. We've had the 4 touches. We fell a few pips short of hitting the 38.2. And here's the other thing, with flag patterns, they are a breakout pattern, and you can typically monitor how much strength, how much buying pressure is in the market by looking at the pole and look at all the buying pressure that's here. Now, with this much buying pressure, is it conceivable that we couldn't quite get down to hit that 38.2 fib by a couple of pips. Bearing in mind that everything else is lining up for me. And for me, yes, it's completely plausible that that could happen. Does it mean it will? No. So because we don't know if it's going to happen, I have to allow for that. So what I've done is, if I just put this fib back on, I've actually allowed for the market to potentially come back down again, hit that 38.2 and the trend line, which is here. And then if we look right, we do have a psychological number, 17500. I've ensured that I'm 15 pips below that. So the ATR here is only 12. I've ensured I'm 15 pips below it. Give myself plenty of breathing room because this really does have a high probability of breaking to the upside. So I've accounted for every eventuality there. If I'm stopped out here, it is simply because the trade lost. But I've given myself every opportunity here for this thing to go on and win. So all I need to do now is just confirm my targets, and you guys know by now that breakout patterns nearly always go for that 127 fib. And there's that 127 fib. I am front running by 5 pips because it is the pound CAD. It does have a big ATR. I want to make sure that I get filled. So the reward to risk, well, even though I've got my stop quite a distance back here, we still have a favourable reward to risk. 39 pips of risk and a reward of 51, which is a pretty decent, a lot of pips up for grabs there, considering this is only the 15-minute time frame. Just one other thing as well to point out is get used to reading candlestick formations, because look at what we did when we bounced off this level. Higher high, higher close, higher high, higher close. This is a bullish candle. We've got a long wick to the bottom and the actual candle body closed in the top 20%. And that means that price tried to push down and was completely rejected and held the very top. So this is a sign that there's lots and lots of buying pressure here. So I'm hoping here that we're going to get the breakout and we're not going to see the return. Of course, it doesn't matter if we do, but I think we could see the breakout here. Of course, time will tell if I am right or if I am wrong. Okay, we're back for a bit of an update on this trade. Around about 18 hours have passed, something like this, since I got in the trade. Actually, when did I get in the trade? No, it was last night. I got in about 9 o'clock last night, so about 14 hours have passed, and it's not behaving the way that I would have expected it to behave. So this being the breakout pattern, typically I would have expected it to break out with this kind of force. We broke out the channel and we've just been meandering. We did go into profit, and then we've pulled back into pretty much this level almost here, which would be kind of a retest at this 17500 psychological number. So there is a possibility here that it's going to lose. Of course, there's always that possibility, but it's not behaving the way that I would have expected it to, not with this candle here. Of course, we could hold this level and we could see the pop to the upside. There's nothing I can do. I've got my stop and ATR below the low. If we just go and take a look here at 240, certainly not going to go and sabotage the trade. Look at what we're doing here. This is a classic sign here that we're moving sideways and we could see a pop to the upside. If we check out the 60, so it's just a case of leaving this. Higher probability here that this is going to go on and lose now, but if it does, it does. I'm not going to sabotage the trade. We're back for the last update, and we can see now that price has rallied down and stopped me out for minus 39 pips. What is there to talk about this trade? Not a lot. Certainly a valid pattern. We got the breakout, we just never saw that continuation, so minus 39.